Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Registered representative, securities offered through Cambridge Investment Research, Inc., a broker-dealer, member FINRA, SIPC, an investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered investment advisor. Family Wealth Services, LLC, and Cambridge are not affiliated. Welcome, everyone. This is the fourth in our series of podcasts with Mary Beth Blessing, attorney at law. Mary Beth's office is located at 310 Huntington Pike in Rockledge, PA, just outside the city limits. Mary Beth has over 23 years' experience as an attorney and 8 years having worked in the court system. So we have someone with over 30 years' experience on our podcast today. She started her own firm in 1999 as a firm handling divorce, child custody, and related matters. The firm has expanded with 2 additional attorneys, and they handle all other areas of personal and business law. So, Mary Beth, we're talking about divorce here, and specifically divorce when you own a business. Now, divorce in and of itself can be a very daunting task when both one or both spouses work as employees and receive a W-2. But when there's a complex process when they own a business, much more complex process, and that's what we're going to talk about today. Can you describe some of the big picture issues that need to be addressed in a situation like this?
Yes, it depends on whether one spouse owns the business. It depends on whether this is a family business with lots of different interests. And it depends on whether both spouses own the business and both spouses work in the business. So there's a lot of nuances that can come here. One of the big things that happen when you start looking at businesses is a scrutiny of tax returns, whether they be partnership returns, individual returns, pass-through income returns, S corps, or corporations. You have a complexity of issues there. One thing that can happen is we may have IRS issues that need to be handled delicately. Because of the way things have been reported on business tax returns. Some of the questions are going to be, is this business going to be sold? Is one party going to buy the other party out? What's going to happen there? If it's a family business, was part of that family business an ongoing entity before the parties were married? Is there a premarital component? Is there a minor partner versus major partners? Are there silent partners? You have all kinds of things that can happen here. Can the business continue to function if the parties are the partners in a business? Can they survive a divorce and still continue to promulgate the business? Far more likely in a collaborative or a mediation situation than in a divorce. If they're going to continue in business, what other documents are going to be necessary to ensure the effective running of the business and how they're going to distribute their roles in the business and how they're going to share the income of the business? What other experts are going to be necessary to ensure that uninterrupted service? Is there a buyout? How are you going to get that business valuated? Is there a buy-sell agreement? Is there offers of what a willing buyer will pay a willing seller? Very, very, very complex issues, more in your bailiwick than mine, I'm sure.
Absolutely. And certainly, to the earlier point that you made about whether or not the business is going to be an ongoing concern after the divorce is over, that valuation is a critical element, right, in terms of how that's going to work. But when you look at that, how does one go about the process of handling the business as an asset in terms of the accounting for assets and income for the client couple?
I've seen that most times wherever there's a business, especially a more involved business with lots of employees and different business interests, might be family, it might be other partners, you're going to need a business valuation expert to determine the worth of the business. And that's a very complex process that I wouldn't even begin to touch. In collaborative or mediation, we can mutually agree and select a business evaluator. In litigation, there's often 2 hired guns to battle out the valuation and expensive expert testimony at the court level. It becomes quite cost prohibitive to value the smaller business, which can go by the wayside. I know as an attorney, my dilemma is always, and I'm usually calling on someone like you, Jim, help. Do I value this business? Is this business only an income stream? I only have husband or wife and they own a plumbing business or they own a Mary Kay business, what do I need to value this? Or is it an income stream? I'm concerned. What's the crossover between alimony and the value of the business? If I have a large business and I have a business valuation expert, they know how to take all of that into consideration. But if I have a small business and I don't know if it has value or not, what's the goodwill? Is it a law practice? That's a solo practitioner or a dentist or a doctor, or do they belong to some kind of conglomerate or partnership? I have no idea. And that interplay works. And I have a client that says, I don't have the money. What do you do?
That's a great question. And to your point, there are many businesses out there, especially in today's service economy, where the business really consists of the experience and knowledge of the individual business owner. Talk about myself as a financial planner. Really, there's some value there for my business if I were to unfortunately pass away or get what have you. But in reality, it's really the service that person provides, and it's more of an income stream. So that is a really, really important thing, which lends
Right.
itself to a different approach to the valuation itself. Right now, if it's a business that consists of assets, where if it's say a real estate company of some sort, or it's a business where they own properties across the city and use them as rentals or something like that, clearly that's a different type of valuation because then there's real estate behind it, right?
Right.
So that's a whole different animal. So clearly, bringing in an outside expert who has a certification in business valuation is a critical thing in an instance like this. And there are different types of certifications out there. ASA being one of the designations, American Society of Appraisers, and then CBV. So there's different designations out there that, with the help of your attorney, you can figure out who the right person would be to bring it in a situation like this.
And piggybacking on what you said, sometimes the business rents the property in which they're operating. Sometimes it owns the property. Now you've got commercial property evaluation. That's a whole different expert.
Yeah, real estate appraiser. Yeah.
You want to make sure you've got licensed appraisers that are capable of doing those valuations. So you're really depending on the expert educating you. But the real concern for me is that smaller business where there isn't a $10,000 retainer to put in somebody that's a well-known business evaluator. Unfortunately, there are some really competent business evaluators that don't charge quite that much. But when you get into the big businesses, sky's the limit on what can be spent on business valuation.
Oh, sure. And that gets to the next question that we talked about. In terms of cost, we have some baselines, I guess, that you can think about, right, Mary Beth, in terms of what these things can run. But can you give us a sense, at least in your past experiences, what it might take to value a business in terms of a cost?
Well, I say that most times I'm getting mostly a minimum of $10,000 retainer if it's a significant business. If it's one that I'm telling you I'm not sure, I, thank God, have some relationships with some business evaluators that I can get on the phone and say, hey, is this worth valuing? If I give you a few facts, can you help me out here? And they'll say, it's all goodwill. Don't bother valuing. It's income stream. I've paid $2,500 just to have somebody review tax returns from a business. And that was from a very reasonable business evaluator who put a number on the business. And the courts look at it. If you're going to be in litigation and you don't have a business evaluation done, there is no value assigned to that business. That's how Bucks County looks at it. And Montgomery as well. Bring me an evaluation or I'm not counting the business as an asset.
Wow. That's certainly a motivator, right? In terms
Certainly a
for both sides
motivator.
to
So
get
you
it
don't
done.
want to make a mistake as to whether you should value that business or not.
Now, we touched on a little earlier about the implication if the business is owned jointly between the spouses. In your past experiences, did the business wind up shutting down? And then, how's the remaining spouse able to continue with the business after the divorce?
Most times I find one spouse will buy out the other and that it's not plausible for them to continue. I've had probably 3 cases in my last 20 years where they've continued as in the business
together. Yeah.
together.
Okay.
And then that brought up a whole lot of safeguards because they both had to have 100% access to the records, and they might have come in where one was more savvy to the financial aspects of the business and one was doing the sales and marketing of the business. So their roles get redefined. I remember having a business that was in the entertainment field, and dad and the sons were out setting up all of these elaborate things for big events, and they knew what they were doing, and mom was the marketer and the financial person. So to make that transparent, we had to get a lot of advice from business experts on how we're going to do this, and what do they need in place, and what are the checks and balances going to be on the books. And they've continued to be in business. And but along with that, since that was a family business, we had to make arrangements for buy sell. What if somebody wanted to leave the business? What value were you going to put on the business, and what was going to happen to their share?
And what if somebody died?
Yeah,
Right?
what if
What would
somebody
happen then?
died? And they had a goal that they wanted it to eventually go to their three sons. So they did not want to lose sight of that goal because they were having a divorce.
So in the instance where one spouse, agrees to buy out the other and wants to keep the business afloat, what types of financial arrangements do you most commonly see to compensate the other spouse for their share in the business?
Lots of times there are other assets. There might be retirement assets, there might be the marital home. So when you get down to the nitty gritty and you're putting certain assets on one side of the chart and certain assets on the other, typically you're trying to kind of try things, keep things titled where they are, and then filter it down, figure out what the bottom line is, and now you have to fill a plug, so to speak. And that might be filled by a different asset. It might not. It might be a payment plan that's drawn out over the years.
That's great. So like you said, the balance between the other assets and obviously that spouse would be giving up more of those other assets in order to keep the value in the business. That's pretty neat and understandable. Are there any other considerations that a divorcing couple needs to keep in mind around this topic, Mary Beth?
Well, one of the businesses that I hate having to deal with is the family business. That is such a difficult network because there are so many underpinnings that you're never going to know. And you can have your spouse sitting there going, well, they always gave us X amount of dollars every year, and it was the business that paid for this and the business that paid for that. That's typically going to be in an evaluator's hands because they're going to have to look at the books and hope they have one set of books and not two sets of books, which happens. And it becomes extremely complicated because siblings or children have an interest in the business, and they get all up in arms of what's going to happen to this business. It's bad enough when people dissolve a business, whether it be, I have two friends now that have dissolved a partnership in law, which I will never take a partner on in law after watching what they're going through. And that gets nasty. It's like dissolving a marriage. But when you have the business and everybody gets up in arms that you don't want the spouse who isn't the family member to have any of it, that becomes real complicated emotionally
Oh, I
as
can just
well.
imagine. Sure, that probably happens frequently. Um, so in terms of closing comments, I think clearly what we reinforced is that in valuing a business, it's going to be very clear that you're going to have to seek outside help in terms of trying to figure out how to value the business, right? So you're looking
Hmm.
for a certified professional to help you do that. That person may or may not be an accountant, but certainly have credentials within valuing businesses, those special credentials that we talked about.
But for example, Jim, someone who's not a business evaluator but is an excellent CPA, they can help with those smaller businesses and be very helpful. I know that your firm does that type of work, and that's really
We
helpful
do.
to know.
Yeah,
Yeah.
absolutely. We certainly do. Well, Mary Beth, I want to thank you so much for helping us with these podcasts. This is the last of 4 sessions. We may very well have another series coming up in the near future, but for right now, thank you so much for agreeing to participate. And let me give you some information about Mary Beth once again. If you want to reach Mary Beth, you can contact her at 215-663-9016, or you can email her at mblessing, BLESSING, at mbfamilylaw.com. Thank you so much, Mary Beth.
Thank you, Jim.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Registered representative, securities offered through Cambridge Investment Research, Inc., a broker-dealer, member FINRA, SIPC, and investment advisor representative, Cambridge Investment Research Advisors, Inc., a registered investment advisor. Family Wealth Services, LLC, in Cambridge are not affiliated.